The Oahu real estate market data is out for December 2022. The impacts of decreased buyer affordability from higher interest rates are clearly showing up in the market numbers, but those interest rates also are keeping homeowners from selling. I'll break the market down for you coming up next. Hi, I'm Scott Startsman with the High Estates team and two-decade Oahu realtor. The full impact of Fed rate hikes has taken effect in the housing market numbers, with slowing sales continuing to increase, but competition is still strong for homes and condos. So let's look at the numbers and talk about what that looks like in the marketplace. As we see in this first slide, the number of single-family home sales in December were down by 46.6% compared to the same time last year. That's a significant drop in the number of sales, and pending sales or properties that are in escrow are down by 46% as well. So I expect this trend of fewer sales to continue into 2023. The fourth quarter number of sales has been trending in the fewer sales range, or right around the mid 40% range. So I expect every month in 2023 to have fewer than 300 home sales per month. The last time we saw those kind of numbers was in 2012. So I'll say it now, next year will offer buyers much less competition, which will mean buy opportunities and more ability to negotiate. Everyone that said I'm going to wait for the market to soften, here's your opportunity. Now, with that being said, the median price for a single family home was $1,050,000, which was essentially flat from the same time last year. Prices for the year ended up 11.6% compared to the previous year. The median number of days on market, or the speed at which properties are selling, is 25 days, up from 11 days last year, but still fairly quickly compared to a balanced market. So we see an almost 50% reduction in the number of buyers in the market, with sales being off, but we have also lost a lot of potential sellers as well. In this next slide, we see the number of active homes for sale, or the number of homes available to buy on the market, is 597. There are not a lot of homes available to buy, meaning inventory is significantly restricted. To give you perspective, prior to the pandemic, in a market with 5% price appreciation, we had 1,621 homes available for sale. So we are seeing prices holding due to the lack of supply in the market. Even with the number of home sales slowing down, the number of sellers bringing their homes for sale on the market is off by over 20%. This is due to the fact that many people are staying in place due to the golden handcuffs of 2.5% mortgage interest rates that they refinanced into during the pandemic. No one wants to sell their home with a 2.5% mortgage interest rate and buy a new home with a 7% interest rate. So what we see as a result of this is sellers are getting 96.7% of what they are listing their home for. Normal market conditions are between 97 and 98% of the list price. And we are seeing 31.9% of homes being bid up over the asking price. That's 1 in 3 homes being bid up. So to summarize, on the home side, buyers should expect opportunities to be available in the marketplace now and going forward. The cupcake properties, the properties that are renovated, that everyone likes, or ones that I like to say are shiny objects online that people gravitate to, will continue to have strong competition and continued bid ups. The properties that need work or have challenges or issues with them will sit on the market and will have the ability for negotiations. That means sellers going on the market should be doing repairs and renovations before going on the market for sale, and will need to be properly priced, or you will take longer to sell and will have to be more flexible in negotiations in order to sell. Let's look at the condo market now. As we see in this first slide, we had 360 sales of condos this past month in December, down 39.3% from the same time last year. We see the same trend in the condo market as we see in the single family home market. Keep in mind though, the condo market wasn't as bonkers during the pandemic, as there was a flight to homes that had yards and space. So the condo numbers aren't as dramatic, but the trend is still the same. Condo sales numbers have been above 300 sales for every month since 2015, so the sales numbers are still relatively in line with the historic trends. The median sales price for a condo in December was $502,500. That's up 3.6% from the same time last year. The year-to-date condo price is up 7.4%. So there is still some strength there, and the median number of days on market is 21 days, which is still fairly strong. Normal market conditions are going to be around 30 or 40 days. Again, what we see in the condo market is restricted inventory with 1,170 active condos for sale in the marketplace. For perspective, again, in 2019, which was a market with 5% price appreciation, we had over 2,400 condos on the market for sale. That restricted inventory is leading to sellers getting on average 98.8% of their list price and 23.5% of condos being bid up over the asking price, or effectively 1 in every 4 condos being bid up over their list price. For 2023, I expect a continued decline in sales and prices to moderate or flatten out. Inventory is going to continue to be an issue, so I call this market the great moderation, as we have decreased buyers and a slow movement of building inventory back to a normal or balanced market conditions. The opportunities are out there for buyers and there is less competition. Just don't expect a large drop in prices. You do that and you're probably going to miss the opportunities. Thanks for watching my video. Once again, I'm Scott Startsman with the High Estates team. If you have any Oahu real estate needs, we'd be happy to help. Reach out and contact us anytime. We'd be happy to set up a consultation to answer your questions. Look forward to hearing from you.